Hello and welcome to Chapter 12 Notes. So this is the first lecture video for Chapter 12, and Chapter 12 covers partnerships and partnership accounting. I am on page 283 of your course pack, and in this lecture video I'm going to give an overview of partnerships and also discuss the characteristics of partnerships and also discuss organizations that have characteristics similar to partnerships, okay? So here I have the definition of a partnership, and it's an unincorporated association of two or more people to pursue a business venture, okay, as co-owners, and those owners share in the profits and losses of the business, okay? So in terms of specific characteristics about partnerships, because understanding these will help us to understand the concept of a partnership better, the first one is that there's voluntary association. And this one's almost kind of obvious, right? You can't require somebody to be in a partnership. It has to be voluntary. And the thing is, right, is that joining a partnership can result in risk to your own personal financial position. And we'll talk about that here in a second in terms of unlimited liability for a general partnership, okay? The other thing about a partnership is that there will be a partnership agreement. And in that partnership agreement, it's going to specify the profits and losses for the partnership. So let's say that we have two partners, partner A and partner B. The partnership agreement would say partner A gets 60% of the partnership's profits and losses and partner B gets 40%. That would be specified in the partnership agreement, okay? And it would also talk about not just sharing in losses, but also withdrawal agreement. What's going to happen when one partner also wants to leave? You know, what happens when we want to admit a new partner? What happens if the partner dies? Okay? So continuing on with characteristics of partnerships, the other one is that there's a limited life. The life of the partner is limited, and so that if one partner dies or leaves the partnership, that partnership ends. That doesn't mean that they can't continue to do business. It's just that that partnership ends, and then they would have to specify a new partnership agreement. Okay? In terms of taxation, a partnership is not subject to taxes on its income. Okay? It's considered a pass-through or pass-flow entity, okay? And what that means is that the partners take a distribution of their share of losses or profits from the partnership, and then that's reported on their own personal tax return, okay? The partnership itself is not subject to taxes. So you take a share of the income or losses, and then that's how the partners are taxed based upon their share, all right? The other characteristic is mutual agency. It basically means that each partner is a fully authorized agent of the partnership. And that means that either partner, let's say there's two partners in the partnership, either partner can bind that partnership to some contract that's within the scope of the partnership. So if we have partner A and partner B, and these two partners are involved in distributing PepsiCo products, partner A can come to Troy Pano and say, today is Free Pepsi Day for Mary Washington. And then partner B is bound to that because partner A said, we're going to do this. You bound the whole partnership. So basically that means if you're going to go into a partnership with somebody, make sure they're competent and you trust them. Okay? So it has to be within the scope of the partnership. So if we're distributing Pepsi, we can't come over and say, today is free, everybody gets to go to ski out in Charlottesville for free today. That's not going to happen. That's not within the scope of the partnership. Okay? So the other characteristic is unlimited liability. And what this is saying, that each partner can be called upon to pay the partnership's debts. If you can't pay the debts of the partnership with the assets from the partnership, then it can touch your own personal assets. And that's what we were talking about earlier, that joining a partnership can be a risk to your own personal financial position. Okay? So that's what I'm saying here at the top of page 285. If one partner does not have enough assets, right, creditors can lay claim to the assets of the other partnership, and then also touch your own personal assets. So when we talk about general partnership, that basically means all partners have mutual agency. That's what I was just talking about, is that each partner can bind the partnership to some contract that's within the scope of the business of the partnership. All right. Co-ownership of property is the last characteristic, is that the partnership assets are co-owned jointly by all the partners. There are some organizations, you've probably heard of some of these, that have partnership characteristics. And they combine the characteristics of partnership with other forms of organizations. So one of them, for example, is a limited partnership. And so with a limited partnership, we have two classes of partners. And so what I was talking about up here with the characteristics of partnerships, that really applies more to general partnerships, because now we have organizations that have some partnership characteristics, but also characteristics of other forms of organizations. So maybe part corporation, for example. So it has some characteristics of partnerships and characteristics of corporations. Some of these that we'll talk about here. All right. So general partnerships, all partners have mutual agency and unlimited liability. Again, maybe what that means is that if you can't pay the debts of the partnership, then touch your personal assets. A limited partnership, though, has two classes of partners, a general partner and then a limited partner. And with the limited partnership, at least one partner has to be a general partner. And then that partner assumes the management duties and unlimited liability for the debts of that partnership. The limited partner, on the other hand, has no personal liability. Okay? And that would be a good option for individuals, especially the limited partner, who are unwilling to assume that unlimited liability. In that limited partner, because they're also unwilling to assume that unlimited liability, they don't have quite as active as a role. Okay. So the other thing about a limited partnership is it will specify procedures for allocating income and losses between the general and limited partner, just like we talked about through those characteristics of partnerships with the partnership agreement, and similar accounting procedures as general partnerships. We also have limited liability partnerships, and many service firms are set up as limited liability partnerships. And those are designed to protect innocent partners from malpractice or negligence claims that arise from the acts of another partner. Okay, so for example, if there's a malpractice claim against one of the partners, that partner has personal liability, but the remaining partners who are not responsible are not going to be liable. Okay, let's talk about subchapter S corporations. And those consist of 100 or fewer stockholders, and they're treated as a partnership for income taxes. As I was saying, it's pass-flow entity. It doesn't pay income taxes. The partners take their share of income or losses and then onto their own personal tax returns. Provide stockholders with that same limited liability as other corporations. And so that's important. So this is important. Let's talk about this for C corporations right over here. So, for example, PepsiCo, C corporation. So what this basically means is that in terms of the limited liability for a corporation is that I own shares of stock in Pepsi. Don't know very many. I think it's maybe like 2 or 3, some shares of stock that my grandmother gave me a long time ago, and I just never sold them. So I've just held on to them for a long time. Okay. What this means in terms of liability, though, is that I own shares of stock. That makes me part owner of PepsiCo. Now, PepsiCo goes out and does something that results in a lawsuit against PepsiCo. And then it puts Pepsi out of business, right? Pepsi's out of business. My company that I'm part owner of is out of business. But because I have limited liability just for the shares of stock that I own, the most that I'll lose is the value of my 2 shares of stock. They're not going to come after my own house and my own personal car. That's the idea of limited liability. that we see through corporations, okay? That's what we mean, that you're not going to touch your personal assets to fulfill those debts, okay? The most that I'll lose is the money I put into the corporation, which is purchasing the shares of stock, okay? If stockholders work for an S corporation, their salaries are treated as expenses for the corporation, okay? And the remaining income or loss is allocated to stockholders for inclusion on their own personal tax returns, and that's what I was saying earlier with the pass-through entities, okay? Now, you've probably seen an LLC before. You've probably seen that around. This is pretty popular, and I actually I've done some consulting in the past, and I have my own LLC. I haven't done it for a while, and I'm thinking about just closing it out because every year I have to pay $50, okay, to maintain my LLC. And I just keep it up, but, you know, maybe one day I'll do some consulting again. We'll see. All right. But anyways, with an LLC, it contains characteristics similar to a corporation and characteristics similar to a partnership. The owners are called members, and they are protected with that same limited liability as owners of a corporation. So that's what I was talking about there. You know, you're the owner of a corporation. You're the shareholder of Pepsi. You own shares of stock in Pepsi. Pepsi does something dumb. They're not going to come. The most you'll lose is the money that you put into the corporation, which is the purchasing the shares of stock. They're not going to come after your own personal house and your own personal car. Okay? Members of our LLC can also assume an active management role. That's unlike the limited partners. Okay? And that limited partnership usually has a limited life, and it's treated like a partnership for income tax purposes, which means you're taxed on your share of income or losses on your own personal tax return. Okay, and today a lot of businesses or small businesses around town look for LLC, limited liability corporations. Okay, and so this figure right here does a pretty good job in terms of choosing a business form. With a business entity, partnership, yes. A proprietorship, yes. Partnership, yes. LLP, yes. And so you can see all the way across here. Legal entity, proprietorship, no. Partnership, no. LLP, no. LLC, yes. And S Corp, yes. And corporation, yes. Limited liability, partnership, proprietorship, no. Partnership, no. Again, think about that general partner. Okay. LLP, it's limited. LLC, yes, there is limited liability. S Corp, yes. And corporation, yes. Business taxed. This means, does the business pay taxes? Proprietorship, no. Partnership, no. LLP, no. LLC, no. S Corp, no. Corporations, yes. PepsiCo will pay corporate taxes. One owner allowed. Proprietorship, yes. Partnership, no. Two or more people. LLP, no. LLC, yes. S Corp, yes. And then C Corp, yes. Okay? All right. So if we come over here and to the next page, we have some quick check problems, and it goes on page 288 and page 289. And so I want you to pause the lecture video and do those quick check problems here on page 288 and 289, and then we'll come back and check it. All right? Thanks so much. Okay. Hello and welcome back. So let's see how you did. So on page 288, number 3, mutual agency means that each partner can commit or bind the partnership to any contract within the scope of the partnership business. That is true. Number 25, when a partner leaves the partnership, the present partnership ends, but the business can still continue to operate. Yes, that is true. We would just do a new partnership agreement. Number 38, mutual agency means E, a partner can commit or bind the partnership in any contract within the scope of the partnership business. And then on page 289 here, number 39, partnership that has two classes of partners, general and limited, where the limited partners have no personal liability beyond the amounts that they invest in the partnership, and no active role in the partnership except as specified in the partnership agreement, is B, a limited partnership. Okay. All right, I'm going to end this lecture video now, and we will start the next lecture video by talking about basic partnership accounting. Thanks so much. Bye.